All right. Colin, if you could pop in the annotation tool, I'd like to, just as we did in session 2, I'd like to get your key takeaways from Wednesday's session. And this will be also an opportunity for you to ask any questions that are unresolved from session 1 or session 2. So things that you took away from session 2 or questions that you still have outstanding, you can just use that text tool and create a text box in this space and post it. All right, we have one here, how to report a missing pool in RFS. That is key. Very good, very good. What other takeaways do we have? All right, everyone. We have 83 participants and 1 comment. So let's see what other takeaways we have. Is the annotation tool working for you? Is there a reason we're not posting? I'm looking at the chat box to see, and I don't have anyone. There we go. Downloading exception feedback. Excellent. Required versus optional loan records. Using RFS in general. Very good. 4 times of RFS records. Is that might be 4 types of RFS records? Maybe. Exception feedback. Very good. Okay, types. This is excellent. Okay, RFS exceptions, exception feedback. You know, yeah, being able to triage your exceptions between the 2nd business day and the 4th business day is really critical. So knowing how to do that and getting organized for that is going to be really important. Summary, provided if we report 90% of our data. Correct, yes. Very good. All right. Loan activity screen reporting. Excellent. Excellent. 100% of loan and pool must be reported by the 7 p.m. on the 2nd business day. Excellent. Can't change static data such as FICO score. Very good. Very good. All right. Well, thank you for the feedback on here. You have about 10 more seconds to post a comment or question. Otherwise, we will capture this and move ahead. Colin, if you could capture these comments. All right. Just to recap what we covered yesterday or Wednesday in session 2, we did talk about the pool loan sensitive and various records within RFS. We explained about editing appropriately and resubmission. We talked about some of the calculations that were performed in RFS with summarization. And we talked about the fields for editing, for reporting and editing. The common exception messages, summarization alerts, exception feedback, and exception summary. We talked about the download and the 2 ways to report, the upload and the SFTP and online, and which are required, how to report corrections, and how to confirm a file was uploaded successfully using the FA, functional acknowledgement. Now I'll turn it over to Christy.
Thank you, Steve. In today's final session, we will be focusing on the two bolded modules on the slide. We will get started with additional reporting requirements. In this module, we will review monthly and quarterly reporting requirements and explain the timeline for additional reporting requirements. The monthly reporting certification opens on the 10th business day, with the deadline being 7 p.m. Eastern Time on the 14th business day. Loan matching and suspense should be worked monthly. 11/7/14 remittance advice for Ginnie Mae 1 certificates should be reported no later than 7 p.m. Eastern Time on the 8th business day. Only a limited number of issuers actually report Ginnie Mae 1 11/7/14 information. CAVs, SCRA, and Wifit are reported quarterly. New pool data quality should be addressed monthly if you have any. Colin, could you please turn on the annotation tool? Thank you. Using the annotation tool, place a sticker on any of these reporting requirements that you are familiar with, please. Wonderful. Look at all that participation. That's great. Okay. Thank you so much. The monthly reporting certification opens on the 10th business day, with the deadline being 7 p.m. Eastern Time on the 14th business day. To navigate to this screen, hover over RFS, click Exception Feedback, then click the Summary tab. The monthly certification link can be found in the lower right-hand corner, being highlighted in the red box on this slide. Please raise your hand if this screen looks familiar. Wonderful. Thank you, everyone. Colin, please clear the hands. If my name on the 11702 form is Christy N. Christensen and my name on the token form is Christy Christensen, I would not be able to certify as my names do not match on both forms. In order to complete the monthly certification as an issuer, you must be a signer on the active HUD 11702 form in MAMPS. Also, the name on the HUD 11702 and the RSA Secure Token form must match exactly. Like in my example before, my name did not match because one form had my middle initial. For a subservicer, you must be a signer on their internal Issuer's HUD 11702 form and must have an active HUD 11707 form in MAMPS. A quick story. A few months ago, we had an issuer miss the 14th business day monthly certification deadline because only one person had access to complete the certification and they were out of the office unexpectedly. Therefore, a best practice would be to have multiple backups with RSA tokens for the monthly certification process. I will now turn it over to Gail.
Good morning, everyone. Happy Friday, and welcome to the module of RFS for matching and suspense. And this is concerning Ginnie Mae loan matching. What is Ginnie Mae loan matching? This is when we take the data that the issuer reports to us every month, and we try to match specific fields to the agency data that is reported to us every month. The reason that Ginnie Mae performs this process is to reduce the risk of uninsured loans in Ginnie Mae pools, which reduces the risk to Ginnie Mae investors. Some of the agency files that we receive are the FHA Single Family System 843 database, the Computerized Homes Underwriting Management System, VA Guarantee Data, RD Data, USDA RD Data. In RFS, you will recognize this as RHS loan type, which stands for Rural Housing Services. We also we receive PIH data from issuers, but we do not perform PIH matching at this time because we do not receive any data from PIH. We are in the process of collecting this data, so hopefully in the next 6 months or so, we will be able to start performing PIH matching. Ginnie Mae loan matching criteria. So for RD, VA, and FHA, we have 2 static fields that we use for matching. That is case number and OPB. If you do any FHA loans since January 1, 2003, we have an additional 3 fields that we use for matching. That would be interest rate, maturity date, and the first 3 digits of the zip code. And if any of you are working your matching exceptions and you have received a lot of MAT 004 exceptions, if you have any New England state loans or Puerto Rico state loans, we know that FHA had an issue with their agency data and they were dropping the leading 0. So we have been receiving a lot of emails about that, and hopefully with December reporting, you will see all that go away. We were told that they did address that. Was there anybody on here? Raise your hand if you did see or experience the zip code issue, just out of curiosity. Yeah, I see a few of you. Yeah. So hopefully that will be resolved with December matching. I have an overhead question. Again, if you could raise your hands. If you have a subservicer, do they work your matching in Suspense, or do you do it yourself? Actually, you could put that in the chat. If you do it internally, or if you have a subservicer that performs that function for you. Oh, great. Good morning, Juan. Great, good. Thank you for the feedback. So accessing the module for matching and suspense, as you can see on this screen, you go into the RFS drop-down menu, and then you would select matching and suspense. There's also a user guide. At the end of each module, there is a user guide, and you can see this one is highlighted by the red arrow. What we're going to discuss are the downloads, and you can see on the screen we have insurance download, terminate download, suspense download, aged matching, aged terminated, and various suspense. So the insurance matching download file, these downloads are available to review after the 5th business day. Then you'll make some updates, corrections, and then we rerun matching on the 10th business day. So you'll want to pull your report after the 10th business day. The insurance download is dynamic. So if you make corrections and after we run matching, you will see your matching errors go away. If you have MAT exceptions, MAT 001 through MAT 005, they are static for the month. So you will not see those drop. For non-modified FHA loans, we use 5 fields for matching, which we discussed earlier. If you need to review any guidance for uploading documentation or how to cure some loans, you will want to refer to the Mass User Guide, section 7.2. So on your matching and insurance download file, your age download file, you will see match codes. So if you see an MA, that's what you're going for. You will see that means that it matched on case number and OPB. But if you see MA and there will be a following NI, Nancy I, that means that we could not match the interest rate, the zip code, or the maturity date that you're reporting. So what you're going to do is go back and pull the note and verify that the data that you're reporting is accurate. And if it is not accurate, you fix it on your system. If it is accurate, then you want to go back to the agency and check what the agency is reporting, because they may have a data integrity issue. If your loan is an MC status, Mary Charlie, that means we match the case number that you're reporting to a record in the agency data. But the OPB didn't match, so we're not sure we actually have the correct record. So we want you to go back in and verify that the case number is accurate and that you're reporting the correct OPB. Again, if that is the case, you'll want to follow up with your agency, make sure they have the correct data, or there could be some other issues going on, which we will get to later. NC, Nancy Charlie, that means we can't even find the case number you reported in any agency file. So again, you want to make sure that you're reporting the correct case number, and also confirm that you're reporting the correct OPB. One of the other big things you want to do when you see an NC status loan is go into the agency, if it's FHA, VA, or RD, and confirm that that loan is actively insured. Not that it was insured at one point in time, but that it still remains actively insured. If anybody has any questions, or if I'm going too quickly, please put it in the chat. Thank you. This slide maps your matching status codes to your pool accounting exceptions. So NC would be a MAT 001. MC would be your MAT 002. If you have FHA streamlined loans, these next three fields only apply to FHA loans. So a MAT 003, review your interest rate. MAT 005, review the maturity date you're reporting. And MAT 004, confirm the first three digits of the zip code are accurate. Again, your MAT exceptions, the MAT 001 through MAT 005, are static for the month. Your matching exception, or matching status codes, excuse me, will drop off your insurance downloads if corrections are made. So we perform manual hard coding of MC match status loans. So this applies to loans with principal reductions, modified loans with principal reductions, if there is a VA vet, non-vet joint loan, Texas Land Board loans, USDA, RD loans where there are multiple borrowers. Generally, we see a borrower and co-borrower, but there could be up to 5 borrowers on an RD loan, and they are all covered by the LNG, loan note guarantee. And then we also have a process for when the primary borrower for a USDA RD loan is deceased. matching and suspense. Raise your hand if you have ever seen this in your e-notification. Awesome. Okay, see a few hands. All right, thank you. Great, thank you. Has everybody checked their e-notes this morning before they signed into class? Okay, so your suspense e-notification, if you receive this, that means you have suspended records. What that means is those 5 fields that I was referring to, case number, OPB, interest rate, maturity date, zip code. If you change any of those fields after we match them to the agency data, we lock them. And if you change one, we want to know why. Was this a mistake? Was it a system glitch? Was it actually a valid change? So you will get an e-notification. We tell you how to process your suspense file. Inside the bottom of this slide, it tells you where to email the spreadsheet back. It has to be back by the 9 a.m., the second to last business day of the month, which was yesterday. Terminated loan notification. Again, this is an e-note. If any of your loans, and this applies to FHA and RD, if any of your loans have matched to a terminated loan in the agency data, you will get this e-notification. Because again, this presents risk to Ginnie Mae of having an uninsured loan in a Ginnie Mae pool. So what you do is you pull your download, your terminated download, look at the loans. If they were accidentally, the insurance was accidentally dropped, you want to follow up with the agency. Thought I saw a hand raised. I did not. Okay. So this slide is your timeline. Just basically tells you if you get an e-notification, when you get your e-notification, and what types of e-notifications are out there and available. If you, down at the bottom, it talks about monitoring letters, and I know quite a few of you have probably received some emails from the Ginnie Mae monitoring team, and that's because we are looking at your aged terminated data and your aged non-matching loans. So with that, I will turn it over to Christy. If you have questions, feel free to private message me or put it in the chat. Thank you.
Thank you, Gail, for all that great matching and suspense information. To navigate to this screen for the 11-7-14 remittance data, you will hover over RFS, click Pull Accounting Single Family, then click on the Remittance Advice tab. To report the 11-7-14 certificate, you would select the issuer ID, enter the pool ID, and enter the certificate and the current reporting period. Gail, could you go on mute, please, ma'am? That's okay. Thank you. So then you would click Go. Would you please raise your hand if you have submitted 11-7-14 information in the past? Wonderful. We've got a few there. That's great. Thank you so much. Once you click Go and the Remittance Advice screen will display, you fill out the screen and click the Save button at the bottom. Once all of your 11-7-14 information is reported, Please click on the monthly remittance download in the dark blue bar to export all of the information that you've reported. Save this file for audit purposes. I will now turn it back over to Steve.
Thanks, Christy. Hello again, everyone. The next few sections are specific to different modules within RFS. And
Steve, so sorry for the interruption. Is the presentation frozen? I see a chat. Could someone put in the chat box if you can see us? Okay, not for me. Okay. Please proceed. I'm sorry, Steve.
No problem. No problem. Better that everybody's on the same page. So we're going to be covering a couple different modules within RFS that have specific purposes. So the 11.7.14 that was just covered, and here's another one, the SCRA, or the Service Member Civil Relief Act. This is a module within RFS, and based on the guidance in Chapter 34 of the Ginnie Mae Guide, this gives the instruction on SCRA within Ginnie Mae's system. Essentially, this is for active duty military personnel. You could see there in the first bullet the conditions that are needed for qualification to be in this program. And this allows issuers to be able to submit eligibility and reimbursement data to Ginnie Mae if those conditions are met. So you could see that the condition there in the bullet 2. And then you could see also in bullet 4 there, there was manual documentation that had to be submitted as part of SCRA that as of 2020, we were able to incorporate that into an upload feature within the Ginnie Mae Enterprise portal to allow you to upload that documentation rather than send it in manually. All right, raise your hand if you have, if your organization has any active duty personnel that qualify for Ginnie Mae reimbursement. All right, there are a few. SCRA is not a required reporting, but Ginnie Mae does provide this as a facility for you to report and get the reimbursement for those. Very good. Thank you for the participation there. Within the module, or within RFS that is, you could see where SCRA resides in the drop down there, the red box, and that allows you to access that that module within RFS within the portal. This is the main page in SCRA. You could see the different sections on the page. On the left, you have the eligibility processing, and on the right, you have the reimbursement processing. And the red box there in the upper navigation bar shows you the user guide. Now, the user guide is available for any of the modules within RFS. The last selection in the navigation will be the user guide, which is specific to that module. So you can always download that user guide and read about the functionality within that module. And now I will turn it over to Gail for
Thank you, Steve. Before I get started on that, we had a couple questions. This is concerning back with the hard coding. If you are requesting manual hard codes to your match status, you need to email, and I will pop it in the chat, jennymayhelp@deloitte.com. If you don't let us know that you securely uploaded documents, we won't know at all. We have no way of knowing. So you send an email to jennymayhelp@deloitte.com, and then you indicate inside that email why you are requesting us to review your documentation for a manual hard code. So I will pop that email address in the chat once I'm done with CABs. So raise your hand, please, if you have the quarterly verification marked on your electronic calendars. Good stuff. Nice. Very good. So this is your quarterly verification reporting in RFS. It's the custodial account verification. We call it CAVs. You can find more information about this in the MBS Guide, Chapter 16-8, Custodial Institution Ratings. The issuers must submit a verification between the 6th and the 15th business day of March, June, September, and December, stating funds custodians meet the requirements specified above. And as you see, December is right around the corner. This must be reported to RFS. You have two ways. You can do it in a file upload, and there was a button for that on the RFS homepage, or you may do the data entry online, which I believe, as far as I know, everything has always been done online in CAVs. You will have a separate certification for each fund custodian pursuant to the Master Agreement for Servicers, Principal and Interest Custodial Account Form, the HUD 11709. You will access the quarterly verification in the Pool Accounting Single Family module. Once you click inside that module, you will see the screen displayed, and you will select Quarterly Verification. The next screen that displays for you actually describes in detail how to fill out the form and what to do. Your Save button, you may delete. You have options. You need to select your reporting quarter, etc. Again, this is explained on the screen inside the module. Do we have any questions? Okay. I believe I will turn this back over to Steve.
Thanks, Gail. All right, another module within RFS is Wifit, which is the widely held fixed investment trust reporting. So, and we have a muted.
Oh, what you got to say?
Could everyone please mute?
Mute.
Ryan, maybe you could mute
Thank you.
everyone but me. All right, the widely held fixed investment trust reporting. This is a module within RFS, and I'm going to have a little quiz here. Put a thumbs up if you believe that Wifit is mandatory, and a thumbs down if you believe that it is optional. Let's do some voting here. Thumbs up or thumbs down? Okay, I'm seeing some thumbs ups. See one thumbs down, a few thumbs down. All right, thank you for the good interaction there. You can clear the thumbs. The correct answer there is that this is an optional reporting. Ginnie Mae, this is similar to SCRA in the sense that it's optional, and this Ginnie Mae provides a facility for you to report this this data. This essentially is the OID and the MTF data for quarterly reporting. All right, this is basically tax information. So as I mentioned before when we were talking on day one about FAQs, the FAQ subcategory for Wifit is very robust, and it answers most of the questions that people have for Wifit. So I would highly encourage everyone to, if you have a question on Wifit, to visit that FAQ section. This quarterly reporting for Wifit is you can see the schedule there in the box below. It is due April 10th, July 10th, October 10th, and January 10th for the reporting months on the left-hand side there. Corrections are due 5 calendar days later on the 15th calendar day of the month. All right. And Appendix Vi 18 is the guidance that you will find in Ginnie Mae in terms of the appendices. So you could see that link there, or you could find that on the Ginnie Mae website. Okay, within RFS, Wifit is located there just below HRA, HMBS reporting, and once you're in the once you're in the portal, you can access any of the modules that you've been given access to. Incidentally, if you think there's a module that you should have access to that you do not, you should talk to your Ginnie Mae Enterprise Portal Security Officer. This is someone at your organization who is in charge of managing the accounts for your organization.
Steve, I believe they are now called their org admin with
right?
Ginnie Mae.
Okay.
Yes.
Thank you.
Mm-hmm.
Thank you for that. All right. Now this slide will show you the module for Wifit. You can see at the top there is an Issuers tab, and you can run certain reports about your Wifit reporting for that quarter. And now I will turn it over to Christy.
Thank you, Steve. An important task for issuers to perform annually is to upload their company's annual financial documents. This is in accordance with MBS Guide Chapter 3. These must be uploaded into RFS, File Upload, Independent Public Accountant, or IPA. These documents are due within 90 days of the issuer's fiscal year end. Appendix 6-20 provides step-by-step instructions. All documents must be in PDF format with specific file names. Submission dates of annual documents depends on your company's fiscal year end. Do you know the date of your company's fiscal year end? If so, give me a thumbs up. If you do not know, this could be a takeaway to ensure this deadline is met. Oh, good, I'm seeing lots of green thumbs. Oh, I see a couple red thumbs. Okay, so definitely for the For the folks that don't know, this would be a great time to learn what that date is from your company. Colin, if you could clear the thumbs, please. And also, Colin, if you could turn on the annotation tool. Thank you. So using the annotation tool, could you please put a sticker on the option you would select to upload the annual documents? I just spoke about this in the prior slide. So as a reminder, you would go into RFS, File Upload. There we go. I've got some participation now. Yes, that would be on the Independent Public Accountant, or the IPA. Wonderful. Thank you so much. I will now turn it back over to Gail.
Thank you, Christy. So Steve and I are going to talk about a few things here. I'm going to discuss loan substitution. I believe Steve is going to discuss loan purpose 3 or 4 and new pool data quality. Loan substitutions, again, refer to MBS Guide Chapter 14-8, Part D, Defective Loans. Loans may be substituted with Ginnie Mae approval if identified as defective within 4 months of issuance, pool issuance. The replacement loan must satisfy all pool eligibility requirements. The issuer must submit the substitution request to Ginnie Mae buyout at HUD.gov in accordance with the form letter for loan repurchase, Appendix 6-2. Once approved, the issuer must complete the substitution form with loan data. A unique loan ID will be generated for the substitution on or after the 25th calendar day of the month. That's our close open for the reporting period. A defective loan should be removed, liquidated from RFS using the removal code 5 substitution. Raise your hand if you have ever submitted a loan for substitution. Oh. Great. Thank you. Colin, if you could clear the hands, and I will turn this over to Steve.
Thanks, Gail. As Gail mentioned, I'll be covering the next 2 slides on data quality and modified loans. So modified loans are loans in Ginnie Mae that contain a loan purpose 3 or 4. These are HAMP loans, HAMP modifications, and non-HAMP modifications. And the chart here provides a little background here. Ginnie Mae was finding that there was some confusion in terms of how to report modified loans with a select set of certain fields. And so we're providing this in the training to clarify and give guidance. There are 5 fields: first payment date, loan maturity date, loan interest rate, loan OPB, and loan FIC, where some of the confusion resided. So this chart at the top provides the information as to how to report at time of pooling, there in the 4th column, the center column there, and the next column after that, how to report in the L record for monthly reporting to Ginnie Mae. You'll notice at the bottom There is guidance for the original first payment date, not to change that. I guess as you notice in the chart at the top, most of the fields are the data from the reamortized loan. Only the original OPB is the non-modified value. You can see there field 10, M1, field 12, that OPB is the one that Ginnie Mae wants only the original note value. Any questions on modified loans? You can pop that in the chat and we can clarify any of that information throughout this training. So you'll get a set of the slides during this presentation, so you can always keep this one as guidance for modified loans. Recently, Ginnie Mae started looking at new pool data quality, and this is data at origination that Ginnie Mae wanted to make sure satisfied certain data quality rules that Ginnie Mae has. Now, a lot of the guidance on these are available in the APM that announce those items, like LTV and CLTV, annual MIP, and first-time home buyer. These are 4 of the fields that Ginnie Mae is looking at and runs a process on the around the 8th business day of the month and provides an e-notification for any issuers who have questions or violations of these data quality rules. The e-notification will be labeled New Pools Data Quality and will be sent to your e-notification box on the 8th business day. The process for this is to respond to those e-notifications with an email to Ginnie Mae Data Quality at Deloitte.com, and you also have a contact number there, 240-403-4199 extension 315, if you have any audio questions for the data quality team. Please raise your hand if you have received a data quality e-notification. All right, there are a few. And a lot of times what we find is that there's an appreciation for understanding the rules and getting it right. So this is a process that will improve your overall reporting to Ginnie Mae. So please, take those as a process improvement. All right, now I will turn it over to Christy.
Thank you, Steve. This slide shows a list of best practices for issuers. Again, 100% of the pool and loan data must be reported by close of business on the 2nd business day. All E and C level exceptions related to pool and loan records must be cleared no later than 7 p.m. Eastern Time on the 4th business day. There should be consistency of data reported in RFS. The case number reported on the loan should match the case number reported at origination. Issuers are fully responsible for meeting reporting timelines and accuracy of data reported by subservicers. Also, adhere to your company's established cutoff date. Ensure the correct liquidation removal code is reported in RFS. Analyze and correct RFS exceptions per severity level requirements and deadlines. Review e-notifications daily. And as I mentioned earlier, have multiple backups for RSA tokens for monthly reporting certification. Using the annotation tool, please put a sticker on the practice which you think is most important. Wonderful. Got quite a few on the first one. Yes, I know, I kind of feel like a broken record, repeating that in every day's training, but it is very important. Wonderful. Well, thank you so much for all of the great participation, everyone. Colin, could we please post the first polling question? Okay, if I could get lots and lots of participation, please, that would be great. Which screen do you use to complete the monthly report certification? So this would be the certification that's due between the 10th and the 14th business day. Great. Looks like we've got lots of participation today. That's wonderful. I know it is Friday. Okay, I'll go ahead and end the poll. And yes, the correct answer is A, the RFS monthly summary screen. Thank you, Colin. Now, if you could post the second question, please. Okay, when are the annual financial documents due? I spoke about this earlier. Wonderful, we've got lots of participation. That's great. We'll give this one a few more seconds. Okay, I'm going to go ahead and end the poll. So 73% of our participants, are the folks that voted, did get it right. The correct answer is D, 90 days after fiscal year end. So that is wonderful. Thank you so much. Colin, could you post our last polling question for this section, please? So here we have, when does the issuer receive notice of terminated loans? This would be one of the items that Gail went over in the matching and suspense module. Give it just a few more seconds where everyone can have a chance to vote. Okay, and I'll go ahead and end the poll. And yes, it does look like most folks got it correct. The correct answer is the 10th business day. Colin, if you would please close the poll. We will now take a 10-minute break and then reconvene to continue training, which I will be presenting. Ryan, could you please start the 10-minute timer? and we will return at 11:11. Thank you. Welcome back from break, everyone. We will now continue with cash and reconciliations. In this module, we will review cash, including cash on hand is in the correct bank account, and how to update your master agreements. Also, we will review reconciliations, explain how and when to submit CAVs, discuss reconciling requirements, and review pull to security and test of cash processes. Reconciliations of cash and TNI accounts. This consists of your bank account statements, your internal servicing records, and information you reported to Ginnie Mae on your monthly activity, which totals are on the summary screen in RFS. Keys to quality Ginnie Mae monthly reporting are following MBS Guide Chapter 16 for custodial accounts, having Ginnie Mae program knowledge, reconciliations, test, and internal servicing controls. Cash management includes Ginnie Mae's access to draft funds from your account following Chapter 16 custodial account requirements, funding P&I shortfalls, completing monthly test of expected P&I recons, reconciling mortgage collateral to securities outstanding, which is also known as pull to security, and completing monthly bank account recons. Miscellaneous items would include, but are not limited to, payment querying and disbursement querying internal recons. Please give me a thumbs up if you perform bank account recons. Wonderful. I'm seeing lots of green thumbs. That is fabulous. Thank you. Colin, could you please clear the thumbs? It is very important that all Ginnie Mae issuers ensure they do not have any restrictions in place that would impact Ginnie Mae's ability to draft funds from their central P&I custodial accounts on draft days. Please ensure the bank has not placed any ACH debit blocks. Also, issuers should have a procedure in place for communicating with Ginnie Mae and Bank of New York Mellon, its Central Paying and Transfer Agent, or CPTA, if any problems arise. This includes available funds for guarantee fee drafts. Another best practice is 1 day prior to the draft, confirm that the account is fully funded and there are not any holds or system limits. On the day of the scheduled draft, confirm funds have been swept from the designated account. If the draft has not occurred, contact your custodial bank directly. Also, provide your Ginnie Mae account executive a plan to remedy the draft failure. Using the thumbs up, please let me know if your company has a process to ensure that bank accounts are fully funded on the day of the draft. Fabulous. There are lots of green thumbs. I like that. Wonderful. Thank you so much for participating. If your company does not have a process for this, please make sure one is created. Colin, could you please clear the thumbs? Your collections clearing account or payment clearing is an optional account. This account can be used for Ginnie Mae and non-Ginnie Mae funds. This account needs to transfer to Ginnie Mae, P&I, and TNI accounts within 1 business day. You may recover corporate advances provided excess funds are restored to the custodial account from this account. Also, this should be a zero balance account, which means you should be able to show the detail of every cent that is outstanding in this bank account each day. For liquidations, the clock starts from the post date of deposit on the bank statement. Since issuers do not post payments received after hours until the next day, they have 1 business day from the date of the post or deposit. Ultimately, funds must be deposited into Ginnie Mae Pni account within 2 business days of receiving the funds. Pni custodial account requirements are as follows. Ginnie Mae funds only, a single non-interest-bearing custodial account, may contain funds for more than 1 pool. A HUD 11709 form must exist for each account, must be maintained at a financial institution capable of ACH. The bank recons must be completed timely, and it must meet the bank rating requirements per CAPS. Please raise your hand if you manage these bank accounts. Wonderful. We have lots of folks on the call that are managing these bank accounts. That's great. Colin, could you please clear the hands? The P&I disbursement account requirements are as follows. You may use a separate disbursement account, must be non-interest bearing, a zero balance account, maintained at an ACH capable institution, must only be Ginnie Mae funds, and only 1 Ginnie Mae issuer ID per account, and a HUD 11709 must exist for each account. P&I accounts are subject to custodial account verification, also known as CAVs. It is not required if the aggregate P&I payments due from the borrower is less than $100,000 in any 1 month as measured by fixed installment per Appendix 6-19. Institutions serving as funds custodian must meet the following 2 requirements. Must be insured by FDIC or NCU SIF and must be rated as well capitalized by its federal or state regulator. Agency rating requirements state that institutions must have a rating that meets at least one of the following. Institutions serving as funds custodian with assets of $30 billion or more must have either a short-term rating by S&P of A3 or better, a long-term by S&P of BBB or better, short-term bank deposit rating by Moody's of P3 or better, or a long-term bank deposit rating by Moody's of Baa3 or better. Institutions with assets less than $30 billion must have an IDC rating of 125 or better, or a C+ or better by Kroll. CAVS is due between the 6th and 15th business day of March, June, September, and December, as Gail explained earlier. The T&I custodial account requirements are as follows. Bank account may be interest-bearing. Funds may only be used by the issuer to pay charges due and payable by the mortgager. Must be Ginnie Mae funds only. Must have a HUD 11720 for each bank account. Bank recons completed timely, which is within 30 days of your issuer's cutoff. Must have a separate escrow custodial account for FHA 203K funds. a separate escrow custodial account for buy-down funds, and a separate escrow account for any other funds per FHA, VA, RD, or PIH. P&I temporary shortfalls can be caused by late payments from mortgagors, NSF checks, and incorrect advance calculations. Non-recoverable corporate advance permanent shortfalls can be caused by SCRA, curtailment adjustments, loan payoffs, foreclosure liquidations, and TNI shortfalls. As a homework question, do I have a volunteer that would like to share how their permanent shortfalls are funded? If so, please unmute yourself and share. Okay. If I don't have any takers, we will move on. Any shortfalls for Ginnie Mae 1 pools are due to custodial account prior to the 15th calendar day. For Ginnie Mae 2 pools and shortfalls, any shortfalls are due to the custodial account prior to the 19th or 20th calendar day, depending on the ACH draft for Ginnie Mae 2 pools. Oh, I see a comment here from Trudy. She says, I'm freezing up. Can everyone hear me and see the slides moving?
I believe that's an old comment.
Okay, perfect. Thank you. Sorry, I just noticed. Okay. Colin, if you could turn on the annotation tool, please. Place a sticker on the method your company uses to fund P&I shortfalls if you know. Companies can use corporate advances, which are issuer funds, excess funds, which are unscheduled recoveries of principal on the pools, which can be found in LBS Guide Chapter 15-5, or the Pool Advance Agreement, which are bank funds. Also, Appendix 6-1 must be completed. Wonderful. Thank you, everyone, for your participation. Using the thumbs up, please let me know if you review your test of expected P&I. Wonderful. I see some green thumbs. Thank you so much. Test of expected P&I is required on every pool. It is performed by the issuer. Provides minimum dollar amount in the P&I account. Total of all pool cash shortages funded by the issuer may not be netted with pools that you have cash overages with pools that have cash shortages. A best practice would be to fund your P&I account for any positive differences in one transaction and retain the pool level documentation for audit purposes. Then withdraw funds from your P&I account for any negative differences in one transaction and retain the pool level documentation for audit purposes. Also, the test of expected calculation is only accurate when your pool to security recon is 0. Here is a test of expected P&I recon. Most servicing systems will complete a similar test of expected P&I recon like the one displayed. Using the thumbs up, please let me know if you review your recon of mortgage collateral to securities outstanding or your pool to security recon. Okay, I'm seeing lots of green thumbs. Thank you. Colin, if you could clear the thumbs, please. The pull to security recon is required on every pull and performed by the issuer or your servicing system. If the pull is over-collateralized, the adjusted pull principal balance is larger than the security balance, and you need to recover unscheduled principal from liquidations or curtailments. There is up to a $100 tolerance per pull if no unscheduled recoveries of principal for the month. Under-collateralized means that the adjusted pull principal balance is less than the security balance and you need to remit principal, most likely by a corporate advance. There is a $1 per pull per loan with a maximum of $50 tolerance per pull. Here is a pull to security recon. Most servicing systems will complete a similar recon like the one displayed. Here is a sample format of a P&I account recon. Most issuers build this form in Excel. Bank account recons must be completed within 30 days of the issuer's monthly reporting cutoff date for all accounts. The cash flow method is the balance at the end of the previous reporting month plus the daily deposits minus disbursements, which equals the ending P&I cash book balance. This is reported in field 12 of the pull record and is displayed at the bottom of the pull screen. An important note, all adjusting items on the recon must be completely resolved within one of the next 2 reporting cycles. If you have outstanding unreconciled items, it may result in an audit finding. Here is a sample format of the T&I recon. Like the P&I recon, most issuers build this form in Excel. Just like the P&I recon, the T&I bank account recon must be completed within 30 days of the issuer's reporting cutoff dates for all accounts. T&I funds are required to be deposited into the Ginnie Mae escrow account within 2 business days, which is 48 hours of pull settlement. The escrow balance for individual loans is reported in field 29 of the loan record. The escrow balance for all loans within a pull is reported in field 11 of the pull record. An important note, just like the P&I recon, all adjusting items on the recon must be completely resolved within one of the next 2 reporting cycles. Using the thumbs up for yes and thumbs down for no, would you indicate if you ever report a new loan without a T&I balance? Okay, I'm seeing some red and some green thumbs. Thank you so much for participating. Most new loans will have a T&I balance whenever you report them for the first time. Colin, if you could clear the thumbs. And the large red box on the pull activity screen shows where all of the bank account balances are reported on the pull level. These balances can be reported on the RFS file or entered manually online. Also, if you click the small plus sign in the bottom left-hand corner, the custodial bank account information is displayed. This is where you would update any of the bank account numbers and ABA numbers. The Save and Summarize Pull button at the bottom of the screen in the red box needs to be clicked when any information on the screen is updated or if any loan level fields are updated, as certain loan level information is moved to the pull screen behind the scenes. Please raise your hand if you use the funds reported in these red boxes on the RFS exception feedback summary screen in your bank recon. Oh, look at all those hands. That is wonderful. Absolutely wonderful. The TNI funds are a roll-up of all of the TNI balances, and the other funds is a roll-up of all of the PNI and other balances from the pull screens. Colin, if you could please clear the hands. I will now turn it back over to Steve.
Thanks, Chrissy. If anyone wants to use the action above where that raise hand or thumbs up, thumbs down is to give an applaud to Christy for going through 25 minutes of slides just now, feel free to. Oh, there's even a thumbs up. Good job, thank you. All right. We're getting close to the end, but we have a few polling questions that we're going to cover here. Colin, if you could put up the first polling question, what is the time limit to complete the bank reconciliations? All right, we have voting coming in.
And Steve, we do have a question in the chat also that I would like to address when you finish this question.
All right, thanks.
Mm-hmm.
All right, I think we will end the polls shortly. Get your last votes in. See if we can make it up to 60 votes. Almost. All right, closing the poll there, we can see that most people have selected 30 days from cutoff, which is the actual correct answer. 30 days from cutoff is the time limit to complete those. Next poll question, please.
Actually, before we get to that, Steve, so yes. Tanya asked in the chat, is the 30 days for reconciliation completion 30 days or a calendar month? So that is actually, Steve, can you mute yourself for a second, please?
Mm-hmm.
Thank you. So for the 30 days, it is actually 30 days from your cutoff. So if your cutoff is the last day of the month, as in today, even though October has 31 days, if your cutoff is the last business day of the month, then you have 30 days from today to complete your P&I and all of your TNI reconciliations to be in compliance with Ginnie Mae. So Tanya, if you could let me know if that answers your question in the chat, please. Because actually some issuers do have a first of the month Ginnie Mae cutoff. So then their dates fluctuate also. So their Ginnie Mae month would run from the second business day through the first business day. Wonderful. Thank you so much, Tanya. Go ahead, Steve.
Thanks, Christy. Good question, Tanya. Thank you for asking. The next poll question, please. When is the issuer required to submit CAVs, custodial account verifications? All right, we have.
So as a quick reminder for the cabs, this is where Gail and I both talked about that and gave specific months.
All right, we'll give this another 10 seconds or so. Get your votes in. All right, we will end the poll now. The correct answer there is when the FIC equals $100,000 or more. So those that voted C, well done. All right. And the final poll question. What's the purpose of the pool to security recon, the reconciliation of mortgage collateral to security outstanding? This is what Christy went over just in the last session, so it should be fresh in your mind. All right. Let's get a few more participants voting. If you haven't voted yet, put your vote in there. There we go. Great. Thank you for participating. All right. The answer to this one is it notifies issuers of collateral to security discrepancies. The answer is B. So well done. All right. If you could remove the poll. Excellent. The next section that we're going to do in training is just to talk about forms and calculations. All right. Now for the RFS pool and liquidation calculations, you can find these in Appendix Vi 04 in the Ginnie Mae Guide. You can see the appendix references there for the 11710A as well as the 11710E liquidation schedule. Each of those has the form itself and an instruction to go with it. I'd like to open up the floor now for any questions that anyone's had from any of the 3 days that we've been presenting for Monday, Wednesday, and Friday of this week. It could be on any of the topics we touched on, or any open items that you have a question on. While we're waiting for any of those questions to come in, you can see some of the email addresses there, cxg@hud.gov, Christy, Gail, and myself. And there also is a link there to the presentation, the workflow document, the very important VI 19, and the manual hard coding loans document. I have a couple questions coming in. This is good. All right, Mary asks, how can some data in loan reporting get corrected without having to repurchase the loan? We have some loans that have discrepancies with the Pni, FIC, first payment due dates, and maturity dates.
So Steve, with that question, basically you will need to go back to your Ginnie Mae account executive. And if we have any Ginnie Mae account executives on the line that would like to speak to this, that would be great.
And just to clarify, this is a discrepancy with the Pni reported at pooling and the first payment due date and maturity date at pooling. Is that your interpretation, Christy? Okay.
Yes. Yes, and Mary just confirmed that that is correct because she said that they do reject every month. So the MBS guide states that you should be reporting the FIC, the case number, the first payment date, the maturity date, you know, all the information that was reported on the 11706 in GennyNet. That should be the information that you are reporting every month on your RFS file into RFS. So if you do have discrepancies with those particular informations, we do ask you to reach out to your Ginnie Mae account executive because we do not know if those would be considered to be defective loans. Okay?
Very good. Carter asked, do you know when these recordings will be posted? I will have Yolanda touch on that after we wrap up these Q&A. She can tell you about that.
Thank you, Gail, for providing those additional email addresses in the chat box.
Very helpful. Thank you. Any other questions? Here. Jun asked, we have been reporting Ginnie Mae quarterly Wifit in the past. I just learned from this session that it is an optional reporting. Can we stop reporting if we choose not to report any more going forward? Wifit reporting is optional. It's definitely encouraged for the MDF and the OID. And you can look at the appendix for the Wifit reporting for the conditions that should be reported. It's when we say it's not mandatory, it's not like a pool and loan reporting each month, but it is quarterly reporting that does capture the tax information for the pools. So
right. And once it has started being reported, it must continue to be reported in RFS.
Thank you. All right, we have another question. So if the P&I FIC was on the 11706, but it does not match the note, would that have to also go through Ginnie Mae Executive to get it corrected, or go ahead and correct it in RFS?
Yes, you should still reach out to your Ginnie Mae account executive because yet again, I do not know if that is considered to be a defective loan.
Excellent.
You are very welcome.
These are great questions. Keep them coming.
And do we have any Ginnie Mae account executives that would like to unmute and speak and add any information? If we do, please feel free.
All right. Thank you all. I will now turn this over to Yolanda to address the question that Carter had about the recordings being posted, and also to do some follow-up and wrap-up from the session today. So, Yolanda?
Awesome. I have sent. Go ahead.
Actually, we've got one more question I just saw pop up. With all the COVID mods happening, will there be a new mod type? Or will it just be the 3s and the 4s?
One, that's a great question. Ginnie Mae has recently announced a new pool type, ET, for loans that are modified and are 40-year loans. So that will be, those will be 3s and 4s. They also apply to the coding that we talked about with modified loans in the slide session today. And there will not be a new pool type. There will not be a new loan purpose for those. Those will still be within 3s and 4s. The HAMP and the modified HAMP and the modified non-HAMP.